Happy Thursday here in October. Hope if you're in the Pacific Northwest, you're enjoying this continued sunshine. It's been very nice to keep this weather going. This week, we will kind of tip the cards a little bit on Jobs Week. We are right in the midst of it. Plus, we're getting ready for CPI data next week. So here we go again. A lot to cover, that's for sure. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday at 3 is to bring to you the market news and data that we're watching and hopefully weed out a little bit of the noise along the way. We are right back into the midst of things, by the way, right before earnings season kicks up again. So there's a lot going on right now. But basically where we are is we're in this period right now where we're starting to get some of the jobs data, some of the inflation data, and starting to think about what that may mean as far as what the Fed's going to spell out for the next meeting coming up, I believe in October, late October or so. Going back to last week, we had PCE index up 0.6%, which was higher than the 0.5% expected. Fed president came out on Friday, kind of giving their tone of the markets and what they're watching as far as interest rates. And it was very, very, very hawkish. So what that means is very aggressive. The Fed has said time and time again, they're going to keep raising rates. I think that, this data point kind of suggested that inflation is still very high. And here we heard a Fed president yet again sharing that they're going to continue to be aggressive through the end of the year at the very least. All that, we also had consumer spending up 0.1% still. So even in the face of, some of the challenges we're dealing with, inflation, all that, consumer spending, is still up. But then we fast forward into this week, and we got a lot of data that came out this week around the jobs market and a lot of speculation around what that may mean for the Fed coming up. Keep in mind what I just shared, which on Friday, Fed president said they're going to continue to raise rates. So as I jump into this speculation, keep that in mind, which by the way was just 6 days ago, all right? Anyways, coming into this week, we had job openings come out on Tuesday, Wednesday. Basically, job openings were down slightly. So 10.1 million job openings, which is still a giant number. But nonetheless, that is down from where we were last month and a little bit down from expectations. So the question is, are we maybe starting to see some cracks in the job market, in the labor market? I think that this is maybe a starting point. I mean, we're also hearing a lot of companies start to share that they are not only freezing hiring, but also looking at, exploring layoffs. And so this number, if it continues to creep down, is very, very important. And what we've seen this week is, number one, there is another country that has slowed down, I think actually paused their rate hikes. So between that and this jobs number, what we saw was the Fed speculation just pick up. So this week, Monday, Tuesday, Wednesday to some degree, but really Monday, Tuesday, the markets just flew. But we pulled out quite a bit out of this hole that we fell into late last week. End of the quarter, we had this pullback. Friday, the Fed president shared their concerns about inflation, and the markets pulled back even further. Then we jump into Monday, and it's like we forgot everything. Markets picked up significantly on Monday and Tuesday. And again, I think where this is really coming from is this speculation that, okay, if there are cracks in the labor market, that the Fed's going to suddenly back off. I don't know that that's necessarily going to be the case. They've communicated time and time again that they're going to be aggressive in their rate hikes. They just said it Friday. Yet, we get one data point and a little bit of data from a foreign country, and the markets kind of just take off, forgetting that might be the path. So I think as we lead up to this next Fed meeting, just like last time, we're going to see a lot of speculation up and down about what the Fed may do as we get some of these data points. What they're really watching, to be very clear, is watch jobs and watch inflation, because as those numbers come in, that's what's going to drive a lot of this speculation around what the Fed might do, right? So again, I think that's why we're seeing the bump that we saw early this week. Will it continue? We shall see. And as a little bit of a tip of the cards, we've got some big data coming out next week that will certainly add to the speculation one way or the other. On Wednesday, just yesterday, we had ADP employment numbers come out. 208,000 jobs added, which was actually higher than expected. So it's interesting because that kind of tells a little bit of a different story, obviously, than the potential cracks that we saw on this job openings number. And remember, 10.1 million job openings is still a giant number. So even though that's come down, is the Fed going to feel like the labor market is suddenly where it should be. I don't know that I would make that argument, because again, that is still a lot of job openings. There's still a lot of room there for the supply and demand to kind of match up. But anyways, the ADP employment number was important. That said, remember, they just revamped this report, so it's only time will tell how accurate of a measure this might actually be. Looking backwards, ADP employment report really was not that helpful, and in fact, the non-farm payrolls number that we get on Friday is typically a much better sign of what's going on in the labor market. All right, today we had initial jobless claims come out, 219,000. So another kind of tick up in this number, which feeds into the job openings number story there, but obviously not necessarily the jobs added. So we're getting a lot of conflicting data on that labor market. It will be obviously very, very interesting to see what comes as we get the non-farm payrolls number on Friday. So that's going to be very important to watch. I'll kind of share in our question of the week is going to be about like why ADP, why jobless claims, why non-farm payrolls, why all this is so important, and how it kind of factors into not only the Fed decision, but also the recession. Before we get into that though, next week is going to be critical. So definitely tune in next Thursday at 3. We're going to break down the non-farm payrolls number that we get tomorrow. We're going to talk about the FOMC minutes on Wednesday. Obviously going to be very telling. Plus, the big one, we've got inflation CPI data coming out next week. The question comes up, well, so why do ADP, jobless claims, non-farm payrolls, inflation data matter so much? And I think there's two components to it. Number one is the Fed. Fed is by far front and center. It seems to be all that really matters in the market. I would argue otherwise, but certainly makes for some headline stories and a lot of speculation for the short run. But anyways, the Fed, the reason this is so important to the Fed, I'll start on the inflation side of it, and then I'll touch on the jobs. On the inflation side of it, as we all know, the Fed's main goal right now is to bring inflation down. That part's pretty straightforward. So if we see that CPI number come out next week higher than expected, or still showing that inflation is growing, it's very likely that that we see the Fed continue to speak to that message of being aggressive. The jobs part's a little bit harder, and the reason I say that is because up until this point, the jobs market, labor market has been very, very strong. Again, we look at job openings last month at over 11 million. That is a big, big number. And so what that means is that there's too many jobs out there for not enough workers. And so the Fed has felt like they can really get aggressive without causing too much of an impact on the labor market, which is part of their, part of the metrics that they watch. Now, as we see that pull back, as we see potential non-farm payrolls pull back, as we see potential job openings pull back, and all these things, the Fed may not feel as confident in how aggressive they can be, right? What I don't think they want to do is send us into a big downward spiral as far as the economy goes in the labor market and having a lot of people out of jobs. So there's a lot of wiggle room now, but as that shrinks, I think that's the important thing to watch. The Fed may likely, if that trend continues for a while, you may hear a little bit less of an aggressive tone from them because they don't have that bargaining chip, so to speak, in their pocket, right? Now, the other side of this is it also relates a bit to the recession, because what we've seen is, as you know, negative GDP quarters. That said, gross domestic income, which earnings will tell a big story of that coming up here in October for the numbers moving forward. But so far, gross domestic income has still been rising. However, the labor market has been very, very strong as well. And so when we start to see cracks in the labor market, or if the labor market actually slows significantly, that can be a sign that maybe, we're getting closer to that recession point, right? Now, again, to emphasize from last conversation last week, when we find out we're in a recession is typically when the markets are picking back up. So keep in mind, just because we may be in a recession later this year, next year, whatever it might be, that doesn't necessarily mean the markets are going to drop further, okay? So keep that in mind, but it's very important because the labor market has a huge role on not only what the Fed's gonna do, but also, the recession potential moving forward, right? So very, very timely question of the week, and gear up because again, tomorrow we've got non-farm payrolls. And next week, more importantly, we'll hear from the Fed, but we also have CPI, which is going to be a huge data point for what the Fed may do in a few weeks. Thanks for joining. We'll see you next Thursday at 3, and have a great upcoming weekend, enjoying another sunny weekend here in the Pacific Northwest.